Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, July 2nd, 2025. Let's take a look at the charts. I'm going to start with this one. I do want to mention that on Tuesday, wickedstocks.com put out a stock pick on Symbotic Incorporated. They are an American robotics warehouse automation company based in Massachusetts. Right on the edge, once again, of a significant buy signal that we would expect to play out through the rest of the year. Beyond the 20% return we would envision over time. You want to check that out? You can by going to wickedstocks.com and taking advantage of our 5-day free trial. It's still a relevant stock pick, and we'll be releasing another in the next day or two. We do 2 a week. We also do daily Triple Q daily SPY analysis that you could see with that 5-day free trial, as well as weekly Apple stock analysis. So go to wickedstocks.com and check that out. Tesla. Long-term chart going back 5.5 years, we've had trouble in the low to mid 350s. We've been mentioning how this is an area that can be sold, and only can we buy the market through the rest of the year, really, unless we close the week, any week, above that 354.78 rising channel top. We've tested this a number of times over the last 2 months and have fallen away each time. And in fact, it was the channel bottom that we anticipated the first time, and that was back in early June. Obviously yesterday, that is Tuesday, we gapped and opened below the 311.08 rising channel bottom. And I see this as a long-term sell signal. Now, there are no certainties, of course, in terms of what we can expect. I've been mentioning 272.87 as a 1 to 2 week target. That is still in play. And I have that as a session containment level only. I do think what we're seeing now, if you're looking at what I like to call structure, channel structure, is 261.77. So holding below 311.08, I consider 261.67 a 2 to 3 week objective. We could see that by the end of next week, potentially. Holding below 311.08, I'm expecting selling pressures to build, and 261.67 likely over the next 2 to 3 weeks. I also think, as I've been saying, that over the longer haul, as we continue, into later Q3 over the next several months, we could actually see the 160s, 160.86 to 166.96 in reach over the next 2 to 3 months below 311.08. Now, on the way down, 261.77 would offer a meaningful secondary sell signal, sort of an underscoring confirmation of that longer-term objective. And so if you're reluctant to go short now below 311.08, just know that our next meaningful sell signal on a longer-term basis, which is a multi-week basis, would be a settlement below 261.77. And then it does become clearer and clearer to me that the 160s are likely within a matter of a couple of months of closing below the 261.77 formation. But I think, you've got this rising channel bottom, rising flag at the base of a move. You can't really appreciate it with this chart and going back in time. This rising channel bottom at the base of a move, when you close below it, you expect at least the 221.86 low area that was established back in March and April. And that is an expectation as well. This is probably over the next couple of months, 1 or 2 months. But I don't want it to get in the way. I don't want it to blur the importance of 261.77. If I were to just break it into segments, holding below 311.08, expecting 261.77 over the next 2 to 3 weeks, closing below 261.77, we can clearly anticipate the 160s within a couple of months. But I do think that if you're kind of a big picture trader and you could conceivably be reaching for 160, 165 strike out of the money puts right now that don't expire on this 2 to 3 month move. I would go 6 months out on the expiration prices of, say, a 165 out of the money put below 311.08.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
So I think I've said that all enough. On the way down today, we do have 284.70, can contain intraday selling pressures. That is this low pullback low here from several weeks ago. I don't see it as a substantial point. I do think that holding below 311.08, we can anticipate, as I've said, by the end of next week, 272.87. If we break 284.70 today, 272.87 in reach today, perhaps, and we've seen that kind of volatility before, I'm not anticipating it. I think 272.87 is in reach by the end of next week and can contain daily selling pressures, but I wouldn't fall in love with this level. It did hold on the first attempt when it correlated well with the rising channel bottom, but now the two have separated, and I skew more toward the line study, the 311.08 channel bottom, as our trend defining entity rather than a static Fibonacci level. Closing below 311.08 has set up 221.86, I'm going to say by the end of August. And yes, I think by the end of the third quarter, by the end of September, we could see the 160s. Now, there's no certainties here, and I know I'm swinging for the fences, but I do like to at least express the big picture for those of you who trade the big picture. Upside 311.08 is an obvious upward pivot point. You know, if we happen to close back above 311.08, in my book, the rejection of a significant sell signal, which did occur on Tuesday with the settlement below 311.08, is in and of itself a valid sign of strength. And I would expect then, with the settlement today, Wednesday, above 311.08, by the end of next week, over the next week and a half, a return into the 351.39 to 354.78 area. So if you're short now, great. I think that's where one would be if you're a 1 to 2 week swing trader, down to 272.87. If you're a 2 to 3 week swing trader, down to 261.77. And as I've said before, if you're a longer term position player, you could anticipate the 160s over the next several months. But if we close today back above 311.08, you've got the 342.97 former channel bottom that converges into the 350s again anyway by the end of the week. I do think it sets up for the low to mid 350s yet again if we close today back above 311.08. But until then, I see nothing here to do but to either be out of the market or short the market, whether the time frame is 1 to 2 weeks, 2 to 3 weeks, or 2 to 3 months, as I've already articulated. Once again, let me see if I've got this. Yeah, I do have this formation. I don't see 329.88 in reach today. I mean, we could, if we happen to gap, let's say, back above 311.08 Wednesday morning, we could see 329.88 by the closing bell. But as I've already said, closing above 311.08 is a reversal, a significant head fake. If you're short, you want to get out. And then either let it play out into the 350s or go long if you're a 1 to 2 week swing trader. Closing today above 311.08, the low 350s, low to mid 350s likely again by the end of next week. And if over the coming weeks we can finally close above the 354.78 rising 2-year channel bottom, at the end of a week we enter a long-term buy signal that could by the end of the year reach that 517.12 5-year channel top. But not until we close above 354.78 on a weekly basis. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow, of course, with Thursday's Tesla, and you have a great day.